Hi and welcome to this Blueberry Markets video update with me, ďriczywi:VR, head currency analyst. In this video I'm going to take you through the week ahead. We're going to look at some news and some key charts to watch. So we actually begin the week with a lot of bank holidays, so there could be a little bit light volumes or light liquidity going into Monday, but that shouldn't really stop things going through the rest of the week, because we've had some news over the weekend. The US debt ceiling concerns will have evaporated over this weekend, as the House Speaker and Joe Biden have agreed a deal in principle to raise the debt ceiling. So there's still some things to work out here, but there has been an agreement in place now that the US debt ceiling will be raised before the June 1st sort of deadline that Janet Yellen had announced. Now, in other data, we've got RBA Governor Lowe speaking. We've got CPI data out of Australia looking to come in a little bit higher than previous. We've also got the US non-farm payroll data coming towards the end of the week. Obviously, we want to see this non-farm payroll data coming in a little bit less hot than it has been over these recent months. So we'll be waiting to see if that's going to change. ADP non-farm employment change could provide a little bit of insight into how the NFP is going to go at the end of the week. Going on to the US dollar index then, so we've actually got some interesting stuff on the US dollar. I'm actually going to just flick over to the next slide, because I've been looking at some seasonal data, and I've actually been looking at the 5-year US Treasury notes, because there was a potential signal forming on markets made clear to look at the potential for the 5-year Treasury notes to dip at the end of May into the middle of June. Now, I've also put in a chart here that is the US dollar index and the US 5-year Treasury notes, just to show you how correlated the two are. And you can see whenever the US 5-year notes kind of top and move lower, we get a similar thing happening on the US dollar index. When the US 5-year notes start to bottom, the same thing happens on the US dollar index. And you can see actually through the month of May we've been fairly bullish on both, and that's what's happened again this year. So usually at the end of May we usually see a top and the market move lower. So is that a sign of what's to come potentially for the US dollar index? Now, dollar index has broken through the 103 level, which we pointed out in recent sort of videos. We've also heading towards the 105, so maybe the 105 is going to be the area that price kind of sticks to, or we could start to see some changes around here. We are at the 104 handle at the moment, and price does like to trade within these type of levels on the US dollar index, so we may get some kind of pullback start to form here, maybe even a drop back down towards the 102s. Could be on it if we did see that sort of topping happening on the US 5-year Treasury note. So that's something to take note of going into this week. I think that we're probably going to see the push to the 105s maybe before we see any kind of turning point, because there's obviously a strong level of resistance there. Price may want to retest that first, so definitely something to watch over the next week or so. Going on to the dollar yen then, so dollar yen heading for that 142 handle. Again, I did point out recently in a live stream that the Japanese yen usually starts to strengthen throughout June, so there's a potential for the end of this week, if price is at the 142s, there could be a turning point there as well. So we do have to be a little bit careful of longs going into this 142 level, but it'd be interesting to see what happens when price gets there. I do think price will reach it, because as with the US dollar index, it's the next level of resistance where price could retest. So I'm expecting that drive into that level. Aussie US dollar then. So what's interesting about Aussie US dollar at the moment is on this weekly chart, we've had a close below the 0 spot 65.75 lows now. Out of that sort of range, which was the highs of 0 spot 68 and the lows of that level, then, you know, could that introduce some further selling pressure? Could we be seeing Aussie US dollar heading to the 0 spot 62? Again, that could also depend on how the dollar performs, but if we do see that weakness continue in the Aussie, then a move to 0 spot 62 from a weekly perspective makes sense, considering the sort of impulsive phase that we saw, the consolidation, and then the breakout potentially to come. Going on to gold then, so if the dollar's going to strengthen for a short time, further, then the price of gold could continue lower. So I've started to highlight a few levels below the $1950 area. The $1950 area was a nice area to look at for longs because it's an area of horizontal support as well as trend line confluence running through. So I was looking to see if we were going to change trend here. No signs of that on the lower time frame yet, so we can't be looking for longs just yet. But if price was to trade below this area, we do have the 1850 handle, 1895 handle, which could be used as support. If price breaks that, then we've got the lows down through February here at 1810, which could be support. Whether price reaches that, I think, is a little bit of a stretch at the moment, but the nearest sort of supporting area after a break of the 1950 is this 1895 area, so that could also be a point of support for gold. So some things to take interest in this week, especially that seasonal data in the US dollar index, and we'll see if any of that can start to play out. So I'll be updating you this week with a couple of live streams, so hopefully you can join me for those, and I look forward to speaking to you this week, guys. Have a good week.